what should I do with my RSP, TFSA, and non-registered funds investment
Yeah.
accounts?
So your RRSP, which is very, very common, or RIF, okay, if you're leaving Canada, there's no consequences to that. Now, if you are going to withdraw as a non-resident of Canada, the RRSP custodian, RBC, BMO, TD, whoever, will have to withhold 25% of all the payments that go to you. They will have to give to the CRA. That is why Canada doesn't deem you to dispose it when you leave, because when payments are eventually made from the RRSP, Canada will get its piece of the pie. 25% will go to the CRA. Full stop. That's from Canada. You need to know how the RRSP is taxed in the country you're going to. If the RRSP, which is tax deferred in Canada, is not tax deferred in, like, for example, I don't know, Portugal, then it is probably best at that point to just get rid of the RRSP because the advantage is gone, right? Like every year that you're earning the income, it's just taxed in Portugal anyways. The United States is not the case. The United States treats the RRSP for the most part like it's treated here. Tax deferred. It's okay. So if you're moving to the United States, you can keep your RRSP. You should do that. But there's a little trick also with RRSP moving to the United States specifically is before you leave, you want to crystallize your property in the RRSP, meaning sell and buy back the gains. Why? For Canada, that is a non-event. There's no tax to selling in your RRSP. For US purposes, that value that you recognized, when you take it out in the United States, it is not subject to tax in the United States. All that will be levied is 25% going to Canada. But if you are in a high tax bracket, you will not be taxed on that withdrawal in the United States if you do that mechanism maneuver before leaving Canada. So RRSP, if you're moving to the United States specifically, I think you want to crystallize any gains in there so that that value from the date you move to the United States is exempt from U.S. taxation.
About other countries with double taxation treaty like Mexico and Portugal?
No, they might not have that rule. Mexico and Portugal, I don't know how they tax the TFSA, the RSP. So if you came to me, I have networks all around the world in all these countries, right? So I would speak with my colleague. How is the RSP taxed in Mexico? Is there some sort of special treatment? If the answer is yes, then we deal with it. If the answer is no, probably we will consider, maybe winding up the RSP and paying tax, maybe. But depending on the size of the RRSP, we might just keep it intact so that we delay the 25% withholding tax to the Canadian government. So we have to look at the size of the RSP and all that stuff. But TFSA, similar, is different. TFSA, you're not deemed to sell when you leave Canada. TFSA, when distributions are made from it, there is no withholding tax to Canada. The logic is Canada, this is a tax-free account. Canada gets nothing.
Yeah.
Okay? But if you move to the United States, for example, TFSA is not recognized as tax deferred. So any income you earn in it is taxed in the United States anyway. Number one. Number two, you cannot contribute to a TFSA as a non-resident of Canada. Or you can, but there's a big penalty. Like is a penalty to doing so. If you're leaving Canada, TFSA you probably will get rid of, and RRSP, depending on where you're going, you will maybe, in most cases, maybe you will keep it, depending on where you're going.